Welcome back to the Alts Podcast. I'm your host, Horacio Ruiz. We bring you industry leaders and creators to give their insights on the rapidly changing and exciting world of alternative assets. Opinions expressed on this podcast by the host and podcast guests are for informational purposes only and should not be considered investment advice. Podcast hosts and guests may maintain positions in the offerings discussed in this podcast. The intro song, Fishing for Pets, is written and composed by Alan Goldshire from his latest release, Live at the Lakeview Lounge. Thank you for joining me on the podcast. In this episode, we talked to Dylan Marma, the CEO and founder of the Requity Group. Dylan has specialized in alternative real estate investments, focusing on opportunities with mobile park homes and RV campgrounds. In this episode, Dylan gives his thoughts on the current state of the real estate market, but he also provides some great insights on why he got into mobile and RV campgrounds and what it takes to spot and maintain a good investment. I hope you enjoy my conversation with Dylan. All right, guys, thank you for joining me on the podcast today. Today is great. We are going to learn about a different side of real estate. We have the founder and CEO of Requity Group, the Requity Group, Dylan Marma, on the show. Welcome, Dylan.
Thanks for having me, Horacio. Excited to be here, and hopefully we can bring some value to your audience.
Absolutely. I'm sure you will. We're definitely going to get into the Requity Group, kind of what you guys specialize in, and a really interesting kind of alternative real estate market that you're in. But before that, I kind of wanted to start with, the issue of the day, right? There's a lot of talk about the housing market right now. In terms of there being a shortage, rental rates going up, the real estate rates going up, and I kind of wanted to get your take on it. In terms of where we're at right now, what you're thinking about the market, and how people can kind of traverse it. Yeah,
of course. Well, this is something we spend quite a bit of time thinking about and discussing daily, as we are largely most of our portfolio revolves around affordable living, and that's the problem that we're looking to solve for. And we think it's one that there is a huge need and demand for, which is why it's a space we love investing into. Now, right now, we're at a unique time period because we see a huge shortage of housing across the country. So there's just been a huge imbalance of supply and demand. And that resulted, as we saw in recent years, in just an extremely competitive residential market for home buyers who were waiving all contingencies and going straight with cash purchases and paying above listing price to be able to get into a home and lock in, especially arguably a lot of that was accelerated through having low interest rates and wanting to take advantage of that, and having reasonably low home payments relative to what they were before rates hit a more recent low. So when it comes to that, you still have that same supply and demand issue going on, but now you see rising interest rates, and now everyone's scratching their head and saying, well, now the payment for that, if I pay that same price that I was going to pay 6 months ago, I'm now, my monthly payment is significantly higher. So you're already seeing it start to materialize where pricing is beginning to adjust. And it's largely, it's not adjusting at all because there's a lack of demand in this case, right? I think it's adjusting almost directly in correlation with just keeping the payments the same for the home. So the same type of home is affordable or still relatively affordable from the payment perspective for the people that were buying that home prior to rates hiking. That's of course like very broad level. I don't spend nearly as much time on the residential side, so I'm not going to cite too many specifics, but that's my view right now on the current residential market. Most of my time is spent playing in the commercial real estate market, where we're focused on larger communities, most of which are 100 plus total units, and started off with apartments, and now we've done a lot of mobile home parks in addition to RV parks, and so we really observe this as our major food group is just multifamily real estate and the various forms of it. And we think that right now is an interesting time period as buyers of these larger commercial assets, because we are seeing that I believe I saw recently that mortgage applications are at a 20-year low right now. So we just went from having an insane amount of people trying to go and buy single family homes. And that was arguably a big an alternative towards living in one of our rental communities. And now we're seeing a huge pullback on new home buying due to rising interest rates and everyone pressing the brakes. Now, I don't know how long that will last. I don't know if that picks up again, if pricing corrects more significantly. But it does look good for people that are owning assets that are going to be able to, be rented out as residential real estate right now. But at the same time, we're dealing with the same problem the buyers are, because we're seeing rates rising. So people are slowly pulling back on pricing to be able to accommodate for the rising rates. So there's a lot at play, but that's my kind of long-winded summary.
No, I mean, the thing is that there are so many factors in play, right? And you're talking about things that were occurring, say, prior to COVID, right? And then mix it in with COVID, mix it in with the amount of money maybe that was printed out there, the lower rates, and now throw that in with, rising gas prices, inflation, and rising interest rates. It really, how do you? It takes an expert to analyze all of that, and sometimes even then, right? There's no clear cut indication of what's happening or what's going to happen, 6 months down the road or 12 months down the road. Interesting that you did mention multifamily commercial units, right? Mm-hmm. How has that impacted you, and how do you see that? Like, obviously, you said that mortgage applications that are all-time or 20-year low. So naturally, one would think that then people are going to go toward rental units, right?
Yeah, completely. I mean, rental units have been flooded with demand in recent years too, just as much as a lot of the residential market on the buy and sell side has been as well. Because this is all happening so real time and so recently, I can't say that we've seen rental rates increase significantly since mortgage applications decreased, because they just decreased within the last 60 days or so. So it's hard to say exactly how it's going to impact us, but I'd say that if we look at just the last few years, or even if you want to take like from COVID to present day, we've seen rental rates just start to skyrocket across the country, and I think that's largely just a function of it's somewhat a function of inflation. It's also a function of increasing wages, because if you look at I think, contrary to popular belief, a lot of the rental rates have grown almost in direct proportion to the wage growth over time. So if you look at that in a lot of these major growing cities, you're seeing new jobs come in, higher incomes getting distributed, and that's also putting pressure on rental rates. So we're seeing that being a function of just being in we could say it's been a healthy economy, growing economy is probably a better term for it. And I think that's the question, is now that we've seen major markets. We're sitting in Tampa, Florida today, where we've seen 20% plus rental rate growth in just a year. We just know that's not sustainable, but it's a question of, does that just start to taper off, or does it flatten off completely? Does it even go down? I think these are a lot of the questions that we're asking ourselves at this point in time.
But let's kind of get into it. Let's talk about the Requity group. Kind of like, and you have mentioned it before earlier in the podcast. But I'm interested in the investment fund that you have, what kind of properties you are investing in, mm-hmm. and kind of like what your thesis was for the funds that you are establishing.
Yeah, completely. So I'll take a step back to where I got my start. I got my start 5 years back. I've been full-time in commercial real estate for a little bit over 5 years now. I got my start in multifamily apartments, was actually living in Tennessee at the time. We're buying throughout Tennessee and Kentucky and surrounding areas, and really fell in love with the business, enjoyed all aspects of it. We were vertically integrated, so we managed all of our own assets. So I learned a lot about the ins and outs of not just how to think about buying the properties, but also how to really effectively manage them and keep them occupied and keep them at, maximizing their income potential. Then right before COVID broke out, my partners and I at the time went in different directions. So I started a new company under the Requity group. And at that time, I'd say that I saw a real opportunity in the manufactured housing community space or the mobile home park space, right? I saw that I had a light bulb moment where I realized that these are one of the most affordable forms of housing available. Two, there was an overall net decrease, not a huge one, but there's a net decrease of supply. So while every other form of residential housing is increasing in supply, there was a year-over-year decrease on the total supply available within the MHP space. And there was an increase in need for affordable housing. And then beyond that, I also realized that the average resident would stay for 15 to 20 years. So starting off within multifamily apartments, the average stay is about 2 years. It's about 40 or 50% turnover rate year over year. Whereas to see that the average resident that buys their own home within a manufactured housing community will stay for 15 to 20 years, really what that indicated to me was that there's a lot less risk than maybe is perceived on the onset of this. And I saw that the returns were disproportionate compared to where a lot of other commercial real estate was at the time. You could get just outsized returns given the level of perceived risk that I interpreted at that time. So we really made a huge push into that space. We went out and ended up buying several communities that put us into the top 100 owners in the country. We bought over 1,000 lots of manufactured housing. And then that ended up sort of segueing us into the RV campground space. We started off with some RV campgrounds that had some long-term leases, and then we eventually started to get into some RV campgrounds that had more of a short-term hospitality component to it, because both of those have a similarity in the sense that they're both land-lease businesses. So you're really renting out the land, and you don't have all the constant deferred maintenance and CapEx headaches that you have when you're investing into more property-intensive real estate investments. So we like both models, and currently today, I'd say the market caught up to where I was thinking and how I was thinking about mobile home parks 2 years ago, and the pricing has gotten really, really high and really competitive, which has been phenomenal for our current portfolio, but it's made it a little bit tougher to find new product that we're as excited about. So we occasionally do still find stuff that gets us very excited, and we're very active on the buy side. But I'd say that we had a really good run early on, and now we are still actively pushing, but it's coming down to just a lot of off market, which we've always done off market. We've never bought one on the market, but now we're going the extra mile with a lot more cold calling, direct outreach, just trying to find we'll say the last of the sort of mom and pop ownership opportunities out there. And the RV campground space, where we've been much more active in as of recent, as we found that there's a lot of true mom and pop deals out there. There's a lot more inefficient pricing. There's not nearly the level of direct competition, which has given us the opportunity to have we have 7 RV campground acquisitions in the last 12 months, which has definitely been it's been a fun business, and we've been really happy with the results thus far.
Just curious, how were you able to identify that kind of that opportunity there with the mobile home parks? Like, how did I imagine that once you get into commercial real estate, that maybe that would be something completely off the radar. Maybe I'm incorrect, but how did that come on your radar, and how did you notice that there was an opportunity there?
Yeah, so I was in apartments, and I watched the golden age of apartments put cap rates from being able to buy in a secondary market at say like a 7 cap down to a 6 cap, down to a 5 cap. And I'm just watching returns start to dwindle in terms of what's possible on the yield on the apartment side. And for good reason. I'm still a huge believer in traditional multifamily as well, and still would say that I'm a buyer if the right product is out there. But I was seeing returns compress in front of my eyes, and then I actually met Jim Clayton through another connection in Knoxville, Tennessee, where I was living at the time, who's the owner, not the owner anymore as much, but more of the founder of Clayton Homes, the largest manufacturer of MHP in the country. And because he was out of Knoxville, I had a few friends out of Knoxville that were early on with investing into mobile home parks. And I remember them starting to talk about how they were upset because they couldn't get 20% cash on cash anymore. And I'm sitting there saying, well, I can't even get 10% cash on cash anymore. So why are you upset? Right. So I remember, really having that wake up call when I really started to dig in and ask them the right questions. And I said, well, I of course, like anything else, you always wish you were earlier to the party. But I think we still caught a really good run because we saw that there was a huge gap between, we saw where multifamily had went, and we said, well, I think mobile home parks are probably going to go there as well, if not even compressed further than multifamily has because of the low risk, low turnover nature to it.
Awesome. Yeah, and I wonder, and one of my questions to you was like, and maybe I'll share my personal kind of story with mobile homes, but I remember I had friends living in mobile homes, and we never really went to those neighborhoods. Maybe it was a little bit of a stigma, some embarrassment, maybe that you're living in like maybe a low income building. But I do remember going like when we finally graduated high school and we got invited over for like a party, and not that I had any sort of expectations, but I was like, wow, it was nice. For lack of better words, I could see that the entire space was well maintained. The mobile homes were well maintained, and there was definitely room for a family to live in. What is that ever sort of like was there ever a hesitancy there, like with that stigma where it's like, why are you kind of in that area when you could be doing something else?
Yeah. So I think that growing up in upstate New York, there's probably more of a stigma there than there is in a lot of the different states and markets that we invest into. So definitely there was a little bit of that. I think from my standpoint, I'm agnostic towards the asset type in the sense of I think that it doesn't really impact me about investing into like the prettier looking deals versus the uglier looking stuff, right? But I know that does matter for investors. But I think in my head, more of where I thought the risk probably lied was I thought that maybe that this is a lower income demographic. So maybe there's more defaults, right? They're not going to be able to pay the rent. There's going to be more defaulting, and they're going to be, they're going to flee more often. And what I realized was that the difference maker here is that, one, this is a land lease business, so you don't have all of the constant turnover. So you're not going to be constantly repairing floors and roofs and things along those lines, assuming that the resident owns their home. And then two, I realized that they actually own their home. So that a lot of times we're buying communities where we own the homes at first, we sell them off. But when we sell off the homes, now we call it a tenant owned home or a resident owned home. It's probably their biggest asset to their name. They might have 10 or 20,000, or in some markets, maybe up to 100,000 tied up in this home on the property. And it's going to cost probably 5,000 just to move it. So they're heavily invested in living in that home and maintaining that home. And they definitely don't want to get evicted because that's going to mean it's going to be really costly to go move that home to someone else's community. So I think there's true alignment of interests, that backed by the fact that your average lot rent is usually 50% or so of what they might be paying in rent for an apartment. So the reality is that even though it depends, of course, there's a wide variety of different income levels that live in these communities. But, again, we're talking mostly on the true affordable living communities. Even though, they might have a higher rate of defaulting on like paying for an apartment, or might have a higher collections loss on an apartment, they're talking a much lower level of all-in income owed from them and more skin in the game, which actually leads you to having oftentimes better end result in terms of your collections loss than like a C-class apartment. And it's a lot less headache intensive. I mean, don't get me wrong, property management's never fun and there's always headaches, but I think it's a lot. It's not nearly as rough as on the onset that one like myself might perceive it to be.
Yeah, no, such good insights. And that's an interesting idea that they own the home, but they're still kind of paying a lease right on the land. Mm-hmm. That's kind of an interesting kind of thing. And then maybe on top of that, maybe some like association fees or something like that, right?
And I just want to speak to that because I'm in this business day to day, so I don't know from the outside world if you're not actively investing in real estate or rental properties, I think that it's easy to underestimate what that means. It's not just an occasional replacement of a floor. I mean, when you invest into a heavy property intensive asset like an apartment building, for instance, it's sort of death by 1,000 needles of just like one thing after the next thing after the next thing, and it's constantly consuming and sucking up cash from you along the way. So I think that when you see the true savings on repairs and maintenance and capex by not having to replace constant HVACs and flooring and subfloor issues and water leaks and roof replacements and all of the other things that come along with it, I definitely feel like that's a huge plus when you really kind of put it under a microscope.
Yeah, no, great point. And so then you noticed that you got in you got in early, and then you realized that the rest of the industry may be caught up. And so then you've seen another opportunity, and you've been very open about it with RV campgrounds. What are the differences? Obviously, we could think of a couple, but what are the major differences between an RV campground and a mobile park?
Yep. Yeah, and as mentioned, I think we're definitely bullish on both of the two, and it's more about where can we find the returns that meet our sort of target metrics at the time. So we love mobile home communities, and we'll always have those in our portfolio, and we'll always continue to be buyers. But yeah, definitely, we've just found more volume of RV campgrounds that we can make sense of recently, and it was a natural segue because we were in one land lease business, and this one is oftentimes, I think our first one was it was a half mobile home community and then half campground or half long-term RV. So it just sort of one kind of led us into the next one as we got to better understand the model. This model can be, I think why it's often misunderstood is that there are a lot of different types of RV campgrounds, right? And some look a lot more like apartments do, and some look a lot more like hotels do, and some look like motels do, right? And some look like resorts, right? So I think you really have to kind of narrow down and identify what type of RV campground is sort of your bread and butter. And to put it simply, I like to say there's long-term, there are long-term, and then there are short-term. The short term can be bucketed into either like luxury resorts, high amenity, high dollar per night stays, and then there's short term that are more of like your general like outdoor camper that are there for more like low frills, low amenity, but reasonable rates and just good service and safe places to come visit. Then on the long term side, you have long-term utility focus, which are like true affordable living, which function very, very similar to that of mobile home parks. And then you also have your long-term that are more second homes, right? They're more destination second homes where people will go every weekend. And I'd say that out of the we call it the four total buckets, we like the long-term stuff the best. We really like to focus on long-term that are in great markets that right now will likely serve as second homes for the campers that come and visit. They will be there for years and years on end. Ideally, we want them to be there for decades. We want them to come out to all of our community events and keep their camper there and have their kids come visit. And a lot of times they have their boat there as well. So they're going to go, take fishing trips. And it's just a great, I think, living environment for people. And I think it's much more affordable than a lot of your traditional vacation types. And you get to have a frequency of vacations that a lot of people just don't get the chance to experience. So those campgrounds for us have been definitely our favorite, I'd say, our bread and butter for the most part. We do have some short-term campgrounds as well, which are higher cash flow, definitely higher returns. But I think that the long-term is just, I think that's just more of like a personal thing as investors. I think we like sort of the consistent, steady, long-term stream of cash flows. That's usually where we gravitate towards the most. But the short terms we also think can be phenomenal for high cash flow. But just like anything else, it just comes down to being in the right location. I'd say what we don't like are the deals that are built in the middle of nowhere and they're just there to kind of draw people 2 hours away from town to come to some sort of resort or destination location where there's no real draw or utility function outside of just being there at that campground. I think we've walked away from numerous deals that kind of fit that mold, and we go after deals that are in stronger locations, that whether they're coming for a weekend or coming for years on end, they're there, and it's a good location where there's some surrounding retail and surrounding jobs, so that we can wear multiple hats as we kind of navigate through different environments.
Such an interesting analysis of where it is that you're talking about, the SWOT, right? The strengths, weaknesses, opportunities, all that stuff. What makes a great campground? Like what makes a great, let's say, long-term campground? What makes a great short-term campground? And I read somewhere that one also big difference is, who's managing the properties, right? That's kind of a bit of a challenge.
Completely.
Are RV campgrounds much more, management intensive than, say, mobile homes?
Oh yeah, it's a totally different business in that sense. We've always leaned into some more active management projects from the get-go as value-add investors, so it didn't really intimidate us all that much in that sense. But it is definitely more management intensive. I think your community manager or your campground manager, they are really the heart and soul of that campground, and getting that hire right is everything. Whether it's long-term or short-term, doesn't really matter. It's that their presence is going to be felt throughout every inch of that property. And I think it's really important to be able to have the right managers and also build the right culture in terms of your team that interacts with that manager, to make sure that we're giving these residents or campers the top notch experience. So we've been fortunate to just have a rock star team, and we do a ton of events. Depends on the size of the campground. Some might be every weekend, some might be every other week, but we have constant events where campers can get together. And I think sometimes if you're on the water, you might have fireworks that go off over the water. You might have, we've done tie-dye t-shirt events. We've done St. Patty's Day events. We've done Father's Day, Mother's Day events. We've done all kinds of different, events for the kids. We also will, so that's number one, is the people and the events and like the true hospitality, and make people feel safe, making them feel like a part of a community, and like being there to welcome them, and make sure their experience is number one. That is I'd say the most important part. And then secondary, I think it's just thinking about like your amenity set. What is the layout of the campground? Right? Is there enough room between the various campers? Is there the right infrastructure in place? You definitely want to have full hookups these days. You want to have good full hookups, meaning 30 and 50 amp electric, as well as water and sewer at each and every site. You also want to have good Wi-Fi. I think that's getting more and more important as more people are actually living from the road now. So having a really good campground Wi-Fi is crucial when it comes to your infrastructure. Having a bathhouse and a laundry room are essentials. If they're not there, we try to install those at every campground. That means that people have a bigger bathroom to go and take showers in, because sometimes your camper gets either too small or you have too many people in there. So it's good to have a nice, clean, big bathhouse in addition to a laundry room, because same thing there. A lot of them have like the all-in-one washer dryer. So having a nice nice laundry room where you can do a big load of laundry goes a very long way. Dog parks. A lot of campers have dogs. We love doing the dog parks in there. We love having our, fire pits, ideally big gas fire pits with a bunch of Adirondack chairs around it, sort of a community gathering place. We always like to throw up the string lights around the community, right, to have it kind of bring some life to it at night. And I mean, the list definitely goes on and on. We have our whole list of our, sort of go-to amenities and things along those lines, like even things like cornhole boards where you have competitions and stuff like that. It all goes a long way. So that's in a nutshell some of the key things I think that make a great campground.
So many things that go into it that on the outside you wouldn't really realize at first. And I guess I'm thinking like, with mobile homes and maybe even RV campgrounds, like if maybe they have become more prevalent, right? Like as maybe single family homes become more difficult to attain,
Mm-hmm.
maybe these are even, like you mentioned, second homes, which definitely RV campgrounds are that, but even, maybe these are going to become like the future first home for home buyers, and a good way of kind of entering a market and owning some property. And I wonder if I could get your take on that.
Yeah, and that's actually, glad you hit on that, because that's actually my bet is that a lot of the RV campgrounds, which are there for almost a few years ago, I think it was almost exclusively recreation. And then once COVID hit, it seemed like it sort of made living in your RV more normal, because people started to pick up and move around the country and they can work from the road. So they said, well, I'm just going to sell my house and buy an RV and never look back. Right. And now I think that they were doing that more by choice. But I think that, not that this is, ever pleasant to say, but I think there might be a point where we see that more by necessity, where it's, people are saying, well, I'm getting kind of priced out of the home market. I'd rather be paying off something that I'm going to own rather than renting an apartment. So I'd rather be, at least paying down my RV and going in and getting a camper, and then paying half of my monthly rent goes towards my RV. My $500 payment goes towards that, and then $500 goes towards my lot rent. So I'm paying at the same $1,000 a month, but I'm getting something that I can call mine, and it gives me flexibility to travel and experience the things that I'd like to experience, that kind of thing. So I think that there's definitely a fairly strong possibility of that becoming a more normal way of life. I mean, it just seems natural that would happen at this point, and with the direction that everything's going in, and rent and home ownership becoming more and more difficult to obtain, and RVs becoming more. I think they don't really carry the same stigma. I think people, like the idea of living in a campground, and I think that especially like the younger generation, I think kind of will view it as a pretty, freeing, kind of cool experience. And again, I don't know how much that changes when they start having kids and things along those lines, depending on where everyone's at in life. But I could definitely see it becoming more common for sure.
Yeah, and I think that what I took away from you, if I can have my own little observation, was the idea of creating a community, at these campgrounds. And I think that would make life, to living there so much more appealing, right? Like you feel like you're a part of a community because, sometimes maybe you don't feel that way wherever it is that you're living in a city. You don't feel part of your community. You live there, but I could see sort of being in a smaller size campground, having these events and just feeling like you're a part of something, right?
Oh, completely.
A couple more questions, Dylan. Such a great conversation, man. You're primarily based out of the Southeast, and I'm wondering if most of your investments are in the Southeast, if that's like a geographical thing. And I was also curious. I mean, if you could maybe give me a ballpark figure, like what is an RV campground? What's it cost to acquire an RV campground?
Sure.
Depending on like a longer term one or even a shorter term one.
Yeah, definitely. So most of our investments are in the Southeast, pretty much all of them at this point. And we try to keep it that way. Occasionally we'll look at things that are just outside of our, target, but we really try to keep it that way. It's nice to have economies of scale that you get, and being able to build teams in specific states that can all be there to support each other. And you get to really know the markets intimately to understand how the assets are priced and what kind of occupancy and rental rates you're able to hit in certain markets, things along those lines. So we love the Southeast, and it seems like it's continuing to grow and head in the right direction. So all around, very, very happy with that, and also generally a very business friendly environment, regulatory environment as well. Now, when it comes to pricing can vary so much on RV campgrounds. I guess you could say that about a lot of asset classes, but I mean, I've seen stuff where I couldn't make sense of it for $10,000 per site, and I've seen other stuff where I couldn't make, or I could make perfect sense of it at $100,000 per site. So I think that the location is everything, and I really wouldn't focus on price per site. I think that's a pretty poor metric to go off when you're talking pricing. I would look at more so cap rate when you're going off for pricing, right? Because your cap rate is pretty much, for those that aren't real estate people, it's your unlevered return. So a good cap rate, I think, most people would say is somewhere in the RV campground world is probably going in north of a 7, but ideally you can buy a value add deal that you can bring up to maybe a double digit cap rate, like a 10% cap rate or something along those lines. And if you add in leverage back into the equation, your overall returns start to look really, really attractive. But I would be focused on cap rate, and I would also be focused on the underlying risk, right? Because there's some deals that might look good from a cap rate or return standpoint, but you might be somewhere in the middle of nowhere next to some oil rig that's going to close down in 12 months. And if that closes down, then you have no one there to occupy your place any further, right? So like anything with real estate, it's not just what is the return on the service level if things go right, but it's like what is the underlying risk behind the investment, and you have a diverse group of campers or residents you're able to pull from to be able to live in your community. And how do you ensure that the cash flows are stable, right? It's not just not every dollar of cash flow is the same. You definitely want to make sure you're looking at the durability of your cash flow.
Awesome. Great. I guess I want to leave with, how people could kind of get in touch with you, Dylan, maybe follow some of your stuff and kind of what's on the horizon for the Requity Group. How do you see the next year going for you? Are there some things that you're going to be focusing on more, or kind of looking to pivot somewhere else?
Yeah, no, we're wrapping up our third fund, and we're still bullish on all things affordable living here in the Southeast. So, we keep our eyes on a swivel for, everything we mentioned on the call today: apartments, mobile homes, and RV campgrounds here in the Southeast. We think that there's a huge demand, and we want to be there to provide great experiences for those that live in our communities. So in terms of getting in contact, you can always visit therequitygroup.com. I'm sure we'll throw that in the show notes. And then you can always add me on LinkedIn, Dylan Marma on LinkedIn. And you can shoot me a message on there, and I'd love to connect.
Yeah. And I just want to give your podcast a plug as well. I know you have your own podcast.
That's right. Yep. And Operators and Allocators is our podcast that we run through the Requity Group. So we oftentimes will teach on some of the stuff we talked on today, or whatever's kind of coming to mind, as well as interview some great guests as well. So
awesome. Dylan, thank you so much for being on the podcast. It was great talking to you.
Yeah. Thanks a lot, Horacio. Appreciate it.
I hope you enjoyed this episode. It's always a pleasure talking to someone doing something different like Dylan, and willing to share their experiences. To learn more about Dylan and his company, listen to his podcast, Operators and Allocators, streaming on all major platforms. Thank you for joining me today. If you enjoyed the podcast, give us a 5-star rating or give us some feedback. Until the next time, take care.